All right, back to work we go. We got one more day left this week. We are not done at all. We got some more money to make on Friday morning. And by the way, I hope you guys made some money on that beautiful, perfect pullback we talked about in last night's video. Markets, they keep on pumping right now. They definitely like what they hear from the press conference from Trump late morning here this morning. But I'll tell you right now, though, I see three clues on these charts right now that are telling us, yes, we definitely have some pullbacks we're watching for tomorrow. But if we play our cards right tomorrow, we might have some bull traps, some short trades to sell it on the pullback and then buy the dip to double our profits tomorrow morning. So I have a lot of trades I'm tracking for tomorrow. I'm going to give you guys the entire roadmap in tonight's video. I want to make sure you have a game plan, a roadmap to make some money to finish off the week as well. So let's jump right into it. I mentioned earlier, I have three clues on the charts right now. One of those big clues is right here on the hourly chart. It's very easy to see right now. We're bullish on the S&P and SPY, bullish here on the Nasdaq, triple Qs. I like to use these hourly time frames to give us the best overall direction. That is one very big clue. But you know me, I have some more important clues. I have two more important clues on some faster time frames because we're not going to trade off an hourly chart tomorrow in our trade room. Before we dive into the faster time frames and talk about entry tactics for tomorrow, let's check schedule for tomorrow because there's three things on my mind that you might want to be aware of here as well. First things first is news events tomorrow. We got PMI number at 9:45, consumer sentiment number at 10 o'clock Eastern time. I know there's a red star news event right there, but if I had to guess right now, I would guess the PMI number is the biggest market catalyst for tomorrow. And that consumer sentiment number on a Friday morning, it tends to move these markets. Now, next week, we have a huge block of earnings here. We didn't have much this week to worry about, but next week we got a couple names you might recognize: Tesla, Meta, Microsoft, Apple, Intel. So some of the biggest earnings are next week. Now, why is that important for tomorrow? Well, because a lot of times before these big earnings come out, markets will pull back and correct, profit taking off the highs, or oftentimes we'll start developing into one big trading range. So may not be tomorrow, but as we come into early next week, that's definitely on my mind. And the final thing is tomorrow's a Friday. Now, Fridays are not like any other day of the week. Fridays love to run in the afternoon. So my goal on a Friday morning is to get in as early as I can when I'm at my best and the markets are liquid, but I always try to leave a runner on a Friday afternoon. Go back and see for yourself. Every couple of Fridays, we get these big runs into the close on a Friday. So I'll get in as early as I can, but I always try to leave a runner. So 9:45 news, 10 o'clock news, Friday mindset. And will these markets correct for us? Will they go sideways on us early next week into the earnings reports? Keep that on your radar. But let's get back to our charts though, because it's good to know when the news is, but we all know by now the money's made on the charts. I mentioned earlier, I had three important clues. Let's start first on the S&P and SPY. We'll wrap things up tonight on the Nasdaq and the triple Qs here. One big clue, you don't need me to tell you this right now. We're very bullish overall on the higher time frame. That is our directional filter. But let's drill down to some tick charts right now. Tick charts are based on volume. One tick is one transaction. Bottom line, it makes pattern recognition a hell of a lot easier. That is a 7,000 tick chart, by the way. All the time frames in the upper left-hand corner. And in case you're watching for the first time right now, that yellow line right there, the only indicator I use in my trade room is the 21 EMA. I mentioned earlier, there are two more important clues here on these tick charts. One big clue here is a range here. Range right there. Range right there. Now, ranges, if you learn one thing from me, I hope it is how valuable trading ranges are. Why? Well, first of all, anytime we see a range breakout, we know the breakout leg is a measuring leg and can be used as a measuring move. Also, too, if we keep going higher, all of a sudden now a breakout pullback off the top of that range, right? Think about this range back here. That range right there, a breakout pullback off of that trading range. Okay, there's one more important clue here, and that is that strong spike higher. Had a strong spike higher there into the close. Now, why is a strong spike higher important? Well, because a lot of times in these situations, we go pop up, range, pop up, range. We'll do it again. Pop up into a new trading range. Now, going sideways up here, this is a very specific type of game plan, and in all reality, it's the easiest scenario to make money. I'm going to cover that game plan on the Nasdaq. So if you like making easy profits, you're going to want to stick around all the way to the Nasdaq section on the latter half, the back half of this video. But first though, let's talk about that breakout pullback. In all reality, what I would love to get right now is I would love to go a little bit higher, get up into that measured move, and then get a breakout pullback off of that high. Now, breakout pullbacks, if we play our cards right, we can sell it on the way down and then scoop it up and buy the dip right back up again. You know, for example, I like to get what's called a two-legged pullback. Don't overcomplicate this. It's one leg, it's two leg. Think about a measured move, right? A, B, C, D. And again, the ideal scenario here would be going a little bit higher than two-legged pullback and buying from there. When I say two-legged pullback, that's going to give me the general idea of where I want to then start looking to be a buyer. You know me though, I'm not going to pick a bottom on this. I'm not going to blindly buy that area because it may roll over that previous range down below, and I will talk about how to short that in just a moment. What I'll do in this scenario though is I'm going to wait for price to pull back to the 21 EMA and look for two types of entry patterns. One I call a failure pattern. Let the bears chase this lower. Let them try once. Let them try twice. Why twice? Because now I know where their stops are. Now I know where sellers become buyers, and I can squeeze those stops running higher. The follow-up trade, remember, if you want to make more money, add to your winners. We're going to follow that one up there with a bear trap. It's a higher high in price, a move right below that low. Again, a two-legged pullback is a measured move. Don't pick the bottom. Failure pattern, 1, 2, trap those bears in, squeeze those stops. And then where does the market want to go? It wants to go back to retest the high. It wants to complete a measured move. On the way back to that high, we add to our winners, or sometimes we jump in again, depending on the setup, and we look for that technical bear trap. Now, by now, maybe you're wondering, how do I short this thing during that pullback? I'm glad you asked. This one type of bull trap pattern I look for to short during this pullback. And because we have those earnings next week, and because we're way, way high up in a grinding market, there probably is a chance for us to short this during that two-legged pullback. But make sure you pay attention. To short a two-legged pullback, I need to first get some separation below that 21 EMA, pull back and go lower. The key to this is I need to get separation. Like over here, right? That pullback right there, we didn't get a bull trap short on that one, but that's the type of separation I'm talking about, right? It'll pull back but barely miss that 21 EMA. If I can get that lower low in price, that separation, this is we start looking for that short with that bull trap, okay? Now what happens is this becomes leg one, that becomes leg two. Now we know where our profit targets are, right? During that two-legged pullback, we wait for that price to come down. We then trap the bears in once, twice. Wouldn't that be great too? Because now it's a breakout pullback off that previous range. Remember, these ranges, they love to come back and just bounce right off the top, in this case, top of that trading range. And again, it'll be that failure, trap combination. Failure, 2 tries, trap, remember, separation off the moving average, higher high in price, and that is a fantastic way to add to your winners. Now, I have a couple more variations of this, right? For example, we may not get that 2-try failure pattern right there. It may just bounce hard off of that low. But before we talk about some variations of this, let's slow down for a second because I know most folks watching right now, you know these patterns, you're making money. I get so many emails off you guys making money in that perfect pullback we talked about in last night's video. But if you're watching for the first time right now, this might be way over your head. What are traps? What are failures? Breakout pullbacks? Okay, I get it. Don't you worry though. I teach this entire roadmap. In fact, I have a ton of examples, failures, bull traps, perfect pullbacks. I cover so much more of this in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that video series will teach you a stupidly simple trick we use in our members trade room that tells me literally exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money each day. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves all the trade examples I include in that short video series. The best part is it is 110% free for you. And keep in mind too, folks, I'm going to put all the important links you'll need to learn more about the stuff. I'll put all the important links you'll need in the description of the YouTube video. Start first on the free video classes. Most folks start making money all on their own just by learning the techniques I teach in that free video course. So start there first, and don't forget, come join us. We trade together every morning. The place to be is 8 o'clock Eastern time in our trade room. I'll put trade room membership links down there for you, description of the YouTube video. And if you're on Twitter or X, I post a ton of mindset stuff and videos and chart updates on Twitter X through the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more because of it is all linked in the description of the YouTube video. So where did we leave off? Yes, we talked about getting that separation off that moving average and shorting on that bull trap. Now, one thing about the bull traps up here, these counter trend trades, these are half size trades for me. They're not as high percentage as buying the deep pullbacks in this overall bull market, right? So please be careful with these. Again, in my personal opinion, half size trade, quarter size trade. Now, I mentioned earlier, I want to get that nice deep two-legged pullback, trap those bears in and squeeze those stops back up again, back to retest this high. What if we don't get it though? What if we don't get that kind of bear trap down there? We see so many times where we'll get a nice strong shot going lower and it just bounces back up. Most of the time, we'll get that strong shot lower, bears will try once, bears will try twice, we can squeeze those stops back up. It's very common. However, sometimes though, it bounces hard off that low. So what's the game plan then? Good question. The game plan is if it bounces hard off that low, it'll almost always begin to grind going higher. We call these V bottoms in our trade room. Very simple. Mark a trend line off the high, bring that trend line down off that low. That creates a bull channel. I call these hidden channels in our free video classes. Now, very important. Look left. Find some of these prior swings. What I want is I want to find a prior swing that lines up right around the low of that channel. Now, this could be any of the entry patterns you guys are learning in the free video course. It could be a bear trap, like I'm showing you here. Sometimes we don't have a prior swing, and I flip this into what's called a seller failure pattern. Bears once, twice, and again, squeeze those stops running higher. The bottom line is, if we don't get a chance to trap the bears in like we did this morning, if it bounces hard off that low, it's all about staying patient and buying that first test. First test is the best test off of that channel. These are my favorite trades in our trade room. And then one more variation, I do want to talk about the range up here. Because again, I'm telling you right now, if it goes sideways in a range up here, that will be a gift from the trading gods for us tomorrow. I'm going to talk about why I say that in a moment. The most lucrative trade of the week here could be in that range bound market if we start going sideways here for tomorrow. But first things first though, I mentioned last night, right? If we pop down and we start grinding down. Now again, this may not be the most likely scenario tomorrow with those big earnings next week, and we've been pumping all week this week, so I wouldn't be totally shocked if we saw some profit taking into the weekend, into big earnings next week. What I want you to be aware of is, and we talked about this last night, if I make a strong shot lower, I can trap the bears in and squeeze stops back up. But if we run lower and start grinding down, what's going to happen is that's going to drag these moving averages down with us. The bottom line is, when markets pop and grind down like that, it creates these new channels. It's more likely now we'll see a bull trap up here and a retest of that low before we get that run back up again. So one last variation of this, and I try to go over these because I want you guys to have a game plan in case you're not with us in our morning trade room at 8 o'clock Eastern time. Now, I know what you're wondering right now. Can I short that bull trap? That is not my favorite trade. We're overall bullish right now. There's a very good chance, probably a 50-50 chance, it breaks and runs right back and retests the high. So I'm not a huge fan of that short on the way back down again. Just not a high enough percentage trade. However, if we roll lower and we start grinding, knowing that the odds are good enough to retest that low before we jump back up, what I'll do now is, instead of a sharp move down and 1, 2 back up and buy into stops, I'm gonna flip this now into a bear trap entry. Now, bear traps are pretty simple. Wanna learn them here, right? So bears try once, bears try twice. This is a technical bear trap. Now, why would I do that in this scenario? Because we know that I need to get long as low as I possibly can right now. Why? Because again, we may wind up popping up and rolling back over again. I want to be in the green on that. I want to have my stop up to point of entry, take that 1-to-1 first target. I want to be in a profit on that trade by the time we start running, going higher, right? If I do it like this one over here, right? If I do it like this one and I buy as we're going higher, if I do it again, it works well in a sharp correction. Let me talk about last night on the video. But if it grinds down like this, I do not want to be buying as it goes higher, right? The odds are too high at that point to roll over and retest the low. So bottom line is, if it pops and grinds down, I'm now going to begin looking for a bear trap entry. Okay, they're all kind of bear traps. This is a technical bear trap. A failure pattern here, a trap pattern here. Again, this will make a lot more sense once you get into our free video class. You'll learn about bear traps and failures and the key differences and why and when I use them, right? Now, again, we may get that 1-to-1 first target and it may roll over and take out that low. Okay, pay attention now. The retest trade, anytime we see a grinder, buy the retest. And the retest trade is very simple. Anybody who sells short on that pullback, their profit target's where? Back to retest that low. Is this a good place to be selling? Not in an overall bull market, it isn't. It's a horrible spot to be selling, which means that retest, anybody who sells up here, they become buyers at that low. Great spot now for 1, 2. Now, on the retest, I can be a lot more aggressive, right? I want to look for a bear trap on the initial pop-up because I'm worried that with a grinder lower, it'll roll over and take out that low. I want to protect myself against that possibility. On the retest trade, though, I can be a lot more aggressive. Now I can use that same failure 1, 2 back up again because now I know where that bottom is. I can trap rookies in, selling short into that bottom. Wrong spot to be selling, great spot for a bear trap. In this case, a failure pattern. And again, as always, we look for that add-on with that bear trap combination, right? A technical bear trap. Higher high in price, get right below that low. If you look closely at this, you'll notice that this pattern and this pattern are the exact same pattern, right? The one on the right is a continuation pattern, right? On the left is a reversal pattern, right? Okay, makes sense. They're exact same pattern. And again, you'll learn more about that stuff inside the free video course. All right, so that variation is something that may throw us a curveball here for tomorrow. Now, I want to talk about that range, right? Because again, strong spike up into a range up here. Very good chance here we stick up here in a range. Let's grab Nasdaq right now. Boy, Nasdaq obviously loved to hear about the big AI infrastructure build-up package. Trump, of course, repeated most of that this morning in his press conference. Before we dive into the Nasdaq tick charts, though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this video link with other trading buddies because YouTube rewards me every time you like, share, and subscribe. And I get it. I know we're all busy people these days. I appreciate you guys, though, spending a few minutes of me every evening here on these videos. So thank you so much for the likes, shares, subscribes, all the ongoing support. Now, Now that I beg for your likes and subscribes, let's now dive in and talk about the Nasdaq. You probably don't need me to tell you this. We're obviously bullish right now on the NQ. That is our overall directional filter. Now let's talk about the tick charts here. Now on the tick charts right now, you'll notice there's one more big difference here on the tick charts, and that is that big move going higher. Now that big move's an important clue because we know that anytime we see a big move in one direction, we expect that deep pullback, trapping in those bears and running back up to retest that high. So remember, that 93.5 level is a big area of resistance. Then we have the same clues we saw on the S&P. We have a range and a range. We know that ranges love to break out, pull back. We know ranges love to break out, pull back. And again, we had a spike up into the close, spike up. I wouldn't be surprised at all. See, of course, that measured move, right? Breakout leg, measured leg. We'll know more about that tomorrow morning once we see more evidence of how far this pullback is. But do not be surprised if we find ourselves into a new trading range up here. When it comes to ranges, most important thing is that ranges love to rotate. They act like magnets and they love to rotate. So we rotate back and forth, right? Back and forth, up and down around a trading range. We're going to use things like pendulum swings, measuring above, measuring below. We'll use triangles or megaphones, right? We want to buy low and sell high. Now, if we go sideways, the goal here now will be that range is a magnet. This range is our breakout pullback area. Now think about this. Anytime we see ranges stacked on top of each other like this, what happens is they want to fill in that area in between. So the area in between those two ranges, right, they want to fill in those two areas. So if you understand how that works now if we get that range up here now, as we roll lower, I can look to trade that rotation. What that means is wait for the breakout. Do not chase this thing lower. Trap those bears in once, twice, squeeze those stops. Now, this is where ranges become more lucrative because without a range, we're trying to go back to retest the high. But now we're not. Now we're trying to rotate all the way back up to complete that pendulum swing. This is where ranges get more lucrative because now as we go higher here, that same failure into trap combination, right? That same failure into trap combination is still on my radar. But again, now what happens now? Now we take our profit targets off, not back at the high. Well, I will take some off at that high, but I will definitely leave a piece of this to run up around that pendulum swing. Now, it's also important to remember too, this is a bull range now. It's a bull range in this scenario, right? So if we have a bull range, if we wind up going into a range and breaking down, we may get that bear trap off of that low. We may see a very strong rotation off that high. If we can get a nice big rip off of that low that convincingly breaks through that pendulum swing, that's a breakout. Now, we mentioned this earlier. What do we do with a range breakout? We look for a two-legged pullback. We mark the top of that trading range. We look for that 1, 2. Think about that measured move, right? We don't pick the bottom on that. We trap the bears in, 2 tries. Again, I like 2 tries to run those stops, squeeze those stops. And remember, the breakout leg, measured leg technique, add to that winning trade with that add-on and that bear trap. So a bull range up here, a bull range overnight says, okay, let's buy the bear trap off support levels below it. Again, we're buying, adding on as it runs up. If we start seeing a really strong, convincing break through that high, we then go out and we buy the breakout pullback. 1 try, 2 try, trap those bears in. And again, same idea, right? Failure pattern into a technical bear trap, and we're off to the races going higher here. Let's kick this up 1 more notch now, all right? 1 more notch. So here's one more scenario. A range tomorrow. A lot of times what happens is we'll go into a range and we won't break out going lower first and back up. We'll break out going higher first. Now remember, this is where that previous high up there is really big deal. We don't want to buy high on this. Now, what oftentimes happens is we'll run up and we'll fake out breakout. Now think about how this might work. the market may swing back down again and then back up, right? As it rotates back and forth. If I can get that separation off the moving average, that lower low in price, right? Here's that bull trap pattern I mentioned earlier. Again, it's a counter trend trade, so it's a half size trade, a quarter size trade. But now remember, where's the market want to go? It wants to rotate off the high, off that low. I'm going to warn you right now, this will feel like a full-blown reversal. Okay, when it rotates off that high, that voice in your head is going to be scared to be a buyer. It's not a reversal, it's a range rotation. Just like over here, we talked about this last night. The best pullbacks are the scariest ones because they get everyone thinking it's a reversal. Okay, so if it rotates off that high, promise me, tell that voice in your head, it's not a reversal. It's most likely just a rotation off the high. We're way high up right now on the hourly chart. Now, we may overshoot that low a bit. We may go a little bit further than that. That's fine. We're a bull market though. So do not chase after it. Let the rookies do the chasing. Trap them in once, trap them in twice. Why? Juice those stops. These can be some of the most fun trades. I swear you can hear the market screaming as all the bears get spooked, all the bears get stopped out, and it rotates going higher here. These fake out breakout trades are where professionals make a good chunk of their money each week. Again, watch out for that breakout going higher here. And remember, if it really cooks and breaks out, yeah, breakout pullback, right? If it really breaks out strong, a breakout pullback. But most of the time, if it's just simply a little breakout above, yeah, it's not enough to call this a firm breakout and try to breakout pullback. It'll swing back down again, measure above, measure below. That's a spot now to trap those bears in and whoop, right back up into that range overhead. All right, guys, one more day coming tomorrow. Let's make the most of it on Friday morning. That is the game plan for tomorrow morning. Now, speaking of tomorrow morning, the place to be is in our trade room every morning. The easiest way to start making money in these markets is to learn and trade along every morning at the opening bell. I'm going to put all the important links you'll need to learn more. I'll put them all in the description of this YouTube video. Start first on the free video course. Enjoy all the trade examples. Everyone loves that free video series. Then come join me in my trade room and we'll do it together every morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other. Fantastic job this week. And as always, be here next time. Adios, amigos. Bye for now.